Think you know the greatest investors of our time? What if I told you there's one who's beating Warren Buffett's performance, and yet you've probably never even heard of him? David Abrams is a billionaire investor who operates like a ghost. No interviews, no public appearances, just staggering results. With a track record of tripling the S&P 500's performance and managing nearly $8 billion, Abrams is one of the most successful and secretive hedge fund managers of our time. Referred to as a unicorn by industry insiders, Abrams has built a financial empire from a single office in Boston with just a handful of employees. In this video, I'll dive into the life of David Abrams, breaking down how his secretive nature, unmatched track record, and unique investment strategies have made him a financial powerhouse. From his humble beginnings to his most recent investment moves, and even how he stacks up against Warren Buffett, we'll uncover what makes him one of the most intriguing investors of our time. David Abrams is a mystery wrapped in success. Born to a stockbroker father and a psychotherapist mother, he grew up with a unique blend of analytical thinking and emotional intelligence. After graduating from the University of Pennsylvania with a degree in history, Abrams joined the legendary Baupost Group, where he worked under Seth Klarman, one of the most respected value investors of all time. Klarman once described Abrams as smart as a whip, and someone who thrives on solving financial puzzles. In 1999, Abrams took a bold step, founding Abrams Capital Management in Boston. With just a handful of employees, Abrams built what many call a one-man cash machine, managing nearly $8 billion in assets and focusing on raising money to cross his assets past $10 billion. What's remarkable is that he achieved all this without borrowing a single dollar. No leverage, no flashy risk-taking, just pure, disciplined investing. His achievements are nothing short of extraordinary. Abrams has delivered an average annualized return of 15% since 1999, nearly double the average for hedge funds and triple the S&P 500's performance, including dividends. Abrams' portfolio strategy is just as intriguing. He focuses on undervalued companies, often holding significant cash reserves to pounce on opportunities when others are running scared. This disciplined, contrarian approach has not only made him a billionaire, but has also cemented his place among the greatest investors of our time, despite his preference to remain virtually invisible. It is safe to say David Abrams isn't your typical flashy hedge fund manager. Abrams has carved out his place as one of the most successful investors in the world. What sets him apart is not just his results, but how he achieves them. Abrams avoids leverage, avoids market trends, and operates with a lean team while consistently outperforming his peers. At the core of Abrams' approach is value investing. He looks for companies that are undervalued and full of untapped potential, often in industries facing big challenges or transitions. What makes him stand out is his focus. He doesn't scatter his bets across dozens of companies. Instead, he zeroes in on a few high-conviction investments, putting serious weight behind the ones he believes in most. It's a straightforward, no-nonsense strategy that gets results without the hype. Abrams' recent portfolio moves shows how he stays sharp and true to his investing style. In early 2024, he sold off his stakes in Teva Pharmaceuticals and USCB Financial Holdings, stepping away from investments that no longer fit his strategy. Then, he made a bold statement by buying over 38 million shares of Lohr Holdings Incorporated, a move so significant that it now makes up 46% of his entire portfolio. By the third quarter, he was still fine-tuning, trimming his positions in U-Haul and Camping World Holdings. It's clear Abrams doesn't hold on to investments just for the sake of it. He's always making sure every dollar he invests is working towards his long-term vision. His willingness to adapt while staying focused on what matters most is what makes his strategy so effective. Then there's his approach to cash. He doesn't feel the need to invest every single dollar. Right now, he's holding most of his portfolio in cash. While other hedge fund managers rush to put their money to work, Abrams treats cash like a secret weapon, waiting for the perfect moment to strike. When the market takes a nosedive, he's ready to swoop in and grab the best opportunities while others are scrambling. It's a strategy that keeps his risk low and gives him a huge advantage over those who are all in or over leveraged. What's even more impressive is that Abrams has built his success without borrowing a dime. No risky leverage, no piling on debt, just careful, calculated moves based on the strength of his investments. It's the kind of discipline that's rare in the world of hedge funds, but it works. His results speak for themselves. Take a look at the Quiet Fund Loud Returns graph that shows his performance. While the S&P 500 and most hedge funds have shown steady growth, Abrams' capital has absolutely soared, turning $1 million into over $9 million since inception. This move isn't about luck. It's about sticking to the fundamentals, being patient, and knowing when to make a move. Abrams' steady, no-drama growth proves that his approach does work, and it's why he's considered one of the most consistent and successful investors of our time. One of Abrams' most notable personal investments exemplifies his strategy. In 2007, David Abrams purchased a 20% stake in the Oakland Raiders, a team that was then among the least valuable in the NFL. At the time, the franchise was valued at approximately $929 million. As of last year, the franchise's value has risen to approximately $6.7 billion. This significant increase reflects the growth of over 620% during this period, highlighting Abrams' ability to identify and invest in undervalued assets with substantial appreciation potential. Patience is at its core of how David Abrams invests. He doesn't get caught up in the noise of quarterly earnings or make impulsive moves when the market shifts. Instead, he gives his investments time to grow, often holding them steady for months or even years. This kind of long-term thinking helps keep costs low and ensures his money is always working towards his carefully thought-out goals. What makes Abrams stand out is how simple his strategy is. Clarity, discipline, and the guts to stick to the plan. He doesn't overcomplicate things or chase trends. He focuses on the fundamentals and waits for the right opportunities. His consistent ability to beat the market while keeping a conservative, cash-heavy portfolio is proof that value investing done right really works. Despite all this, Abrams avoids the spotlight entirely. No interviews, no conferences, and famously brief investor letters. This low-profile approach lets him make bold moves, like his 2024 purchase of 38 million shares of Lohr Holdings Incorporated, now over 40% of his portfolio, without drawing any attention. Abrams runs a lean operation with just a few employees, personally approving every decision. His strategy is all about discipline, holding nearly 40% of his portfolio in cash to seize opportunities when markets dip and focusing on undervalued assets with high potential. David Abrams and Warren Buffett share many similarities. Both are value investors, both thrive on patience, and both have delivered stellar results over decades. But their styles could not be more different. Buffett, the Oracle of Omaha, he's all about transparency, hosting shareholder meetings, and writing annual letters full of wisdom. Abrams, on the other hand, operates in near total silence, earning him the nickname Finance's most secretive genius, or sometimes the ghost. Performance-wise, Abrams edges out Buffett. While Berkshire Hathaway has averaged 10% annualized returns over the past 2 decades, Abrams has delivered 15% since 1999, tripling the S&P 500. Unlike Buffett, who uses tools like insurance floats to boost returns, Abrams avoids leverage altogether, keeping his risk low while still delivering exceptional results. Their public personas are worlds apart too. Buffett is a teacher and public figure, inspiring millions through interviews and advice. Abrams avoids the spotlight entirely, keeping his communications brief and to the point. It raises an interesting question. Does public engagement add value, or does silence give a strategic edge? In the end, both investors stick to the fundamentals, finding undervalued opportunities and waiting patiently for them to grow. Buffett's openness has inspired generations, while Abrams' quiet focus delivers extraordinary results without the fanfare. Who's the better investor? It depends on what you value. Buffett's accessibility or Abrams' unmatched precision. Either way, both prove there's more than one way to win the game of investing. Want to know what Warren Buffett's advice is if the S&P returns just 3% over the next 10 years? Click the video on the screen to find out.